Did you know you can buy silver at spot price? Get your 10-ounce bar of silver at spot price today. Go to sdbullion.com/RP. Not only will you be buying silver without any premium, you'll also be supporting the independent media. Reluctant Preppers gets a small commission when you take advantage of this special offer, going to sdbullion.com/RP. That's sdbullion.com/RP.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We're delighted to have a returning guest today. Craig Hemke, founder and host of TF Metals Report, is here with us on Reluctant Preppers. Craig is an astute student of the precious metals markets. He talks to his list of subscribers on their site and to the public at large about metals markets, where they're headed, how it relates to finances in general, about mining, and so on. He also comments sometimes on contrast between developments in the overall economy and economic indicators that are announced and the impact that that has on metals. Craig, thank you for joining us once again here on Reluctant Preppers.
Hey, Donegan, it's always a pleasure, and thank you for the kind words. I was told once by a national radio host, as a matter of fact, John Batchelor told me, he said, you gold bugs, you got to really keep a handle on everything. And that's pretty much the case. If you're going to follow and try to watch and predict where the markets are going, especially the metals markets, you've really got to have your finger in just about everything, and that's what we do.
And I was watching some of the blogs that you've issued over the past week as we started to see some renewal of upsurge in the gold and silver markets, with a lot of the saber rattling and so on that's been going on with geopolitical events, and then a sudden pivot, as you had predicted over the weekend, as some economic reports came out that seemed somewhat favorable. Can you kind of walk us through what those dynamics are, and not so much just on what's going on today, but what are these dynamics that keep coming up, and how they affect the price direction for gold and silver, and in the end, I guess, what that all means to someone who's really concerned about reducing risk long term. But if you could just start out with what you watch for in the both economic and geopolitical arenas that are going to give you clues.
Well, I'll try to tie this all up into one little package for people that think they want to own gold, right, and should own gold for any one of a number of reasons, preparing for the end of this debt-based Keynesian system, or preparing for anything. Physical precious metal is a key ally in those preparations. What people need to understand is the price of gold is determined by the trading of something that is entirely unrelated to gold. It's determined by trading paper derivative electronic contracts that are made to represent gold. Okay, this is as good as gold. This is a future obligation to get gold. No, it's not. But that's how we determine price. Over the weekend, we had all these things going on, the fears about North Korea. We had the events in Charlottesville, all these different things. And Bitcoin was soaring, right? Bitcoin was going crazy. And a lot of people were saying, gosh, can't wait to see what gold's going to do come Sunday. Well, the problem is, gold, as it's determined by this paper trading, that paper trading is almost entirely influenced by other factors. The key one being just one exchange rate of the US dollar and the Japanese yen. If the computers that trade these paper gold contracts see the dollar yen relationship going up, they sell the paper gold. If they see the dollar yen relationship going down, they buy the paper gold. And if the dollar yen relationship is flat, gold does nothing. And so Sunday, after watching Bitcoin move 20% or whatever on Saturday, everybody thought, hey, gold's going to be up $30, $40. No, it wasn't, because that dollar yen relationship wasn't moving. It's really that simple. It's a scheme, it's a con, it's a fraud that's been shoved down everyone's throat to make the metals look as if, oh yeah, they're not anything you want to own, and paper money's fine, and there's hardly any inflation to see. All this other stuff are reasons why that scheme perpetuates and makes the price what it is. All I can say is, for anybody trying to preserve their net worth, their financial well-being, preparing for God only knows what might be coming over the horizon in the months ahead, and they want to own physical gold and silver, it's a great idea, but it is also grossly undervalued from a dollar basis, because they are traded as if they are abundant, and the price is thus low. No, what's abundant are all these banker-issued derivative contracts that are made to take the place of gold and silver. If those derivative contracts go away and we have to then trade just on a one-for-one physical basis, well, the price is going to be a little higher. So anyway, that's what's in a nutshell what's happening with the metals. Metals, as we talk here on Tuesday, had gotten smashed pretty good Monday and Tuesday, largely because that key U.S. dollar-yen relationship went back up because all of a sudden Kim Jong-un looks like he's standing down and the retail sales data was good, and that's what made the computers then sell all of the gold derivatives that they bought last week. Isn't that cool? And again, that's how that works. It's a lot to keep track of, but that really is how it works.
Along the story that you were telling, one of the things that it might be obvious to some of our listeners, but it might be news to some, is to remember that the dollar, you mentioned the U.S. dollar price of gold is manipulated through this paper contract selling. But to remember that, and you mentioned that gold is actually and silver are severely undervalued, even in that measure, but that those dollars today that are being, against which gold and silver are far undervalued, are extremely reduced in value from what they were in years past. I mean, the old saying is a dollar ain't what it used to be. And but most people, if you go up and down the street, say, well, how much do you think the value of a dollar has declined since the Federal Reserve was instituted, all within the same year of the national federal income tax being instituted and the formation of the Federal Reserve and the issuing of the Federal Reserve notes and so on. But most people don't know the decimation that has happened to the value of the U.S. dollar in that period of time. They know it's decreased over time, but if you consider that, and it's argued, I mean, I've seen numbers anywhere from 92 to 98% of the value, depending how you measure it, from 1913 to 2017, reduced value, and it's in those nearly worthless dollars that are down to pennies, what they used to be worth. They were talking about still. Gold and silver being cheap, even in terms of those dollars. What does that mean for people who truly do want to reduce risk of catastrophic loss to their family, regardless of what kind of machinations go on with central banking and the economy and so on?
Well, gold has always been recognized as money for millennia. In fact, silver even longer. All the way back history, you can read hieroglyphics, you can read the Old Testament, right? Gold and silver is what is always the ultimate store of value. And so as you navigate these, these geopolitical and financial waters, you can't beat it as a store of value. That continues to be the case. What makes it such a interesting speculative opportunity is because these banks, and when I say banks, I'm not talking necessarily about your friendly neighborhood banker, in his blue pinstripe suit. I'm talking about the evil guys on Wall Street. They have, working with the central banks, provided this alternative to actually owning the physical metal. All of these different so-called forms of synthetic gold, whether it's an ETF or whether it's a futures contract like we were discussing earlier, or an unallocated account, or all this kind of stuff. They've gotten people to accept, well, no, this is just as good. This is a promise for gold in the future or something like that. And thereby they've expanded the supply. It's like alchemy almost, Dunnigan, right? They've created gold from nothing. Good. And so anyway.
Digital alchemy. Okay.
Digital alchemy. And when that finally unwinds, and the true measure of actual supply is out there, just the math is going to work so much in your favor. But then, like what you mentioned, what is really the American tragedy, if you will, is you got the dates right. Back in 1913, under who's probably the all-time worst American president ever, Woodrow Wilson, we got the Federal Reserve Act and we got the national income tax and everything else. The dollar tried to hold its value until Nixon closed the gold window 46 years ago today, as a matter of fact. And everything, man, if anybody listening wondering why you don't have the same standard of living as your parents did 30 years ago, blame it on the Federal Reserve, blame it on the bankers. The politicians kind of banter back and forth and say, oh, it's a Democrat's fault, it's a Republican's fault. They're all bought and paid for by the bankers, by the central bankers as well. They're all in this scheme together. to hide this all from you, but it's all there. Like you said, plain as the nose on your face. Why is my standard of living not the same as my parents? I make far more money than they did, and it seems like I'm barely getting by. Well, that's because of the Federal Reserve. They are the source of income inequality in the U.S. They are the source of wealth inequality in the U.S. And until that system finally collapses, which it will, because no system based simply on debt and the total growth of debt of these magnificent proportions that eventually can't be serviced, is eventually going to fail. And when it does, and the rubber band snaps back to some semblance of reality, we'll kind of get back to where we were pre-1913 or pre-1971. But in the meantime, what people need to understand, the ultimate source of evil and despair and economic destruction is the current system, is the central bank, fiat money, dollar reserve, fractional reserve system. And that's what has brought us to where we are today.
If we could now, based on that, turn our attention to something, I'm going to merge what you just said about the central banking system being the source of this misery, as well as a term we were joking about a few minutes ago about digital alchemy, and turn both of those together and talk about cryptocurrencies. Why are cryptocurrencies, which absolutely would sound like digital alchemy to most people, are they truly outside the banking system and outside the control of those powers that be? And is that why they're behaving differently from, say, gold and silver?
Yes, the answer to both, that's actually two questions, and the answer to both is yes. As far as I understand them, yes, they are outside of the banking system and government control. For now, the governments are going to see them as a threat to their power, to their financial power, and the power that comes from being able to print the money and tax everybody and everything else that goes with it. And you're already beginning to see this, Dunnigan. Remember the story a couple of months ago about the hospital systems in Europe that were being, their systems were being held ransom and that kind of stuff. Remember that? And what did those kidnappers, blackmailers, whatever you want to call
them? Yeah, the malware authors, wanted payment in cryptocurrency.
What did they want to be paid in?
Absolutely cryptocurrency, yep.
Yeah, they all wanted Bitcoin. Isn't that convenient? Now, whether that was an actual story or a planted story, it is now being put forth, and there's actually legislation moving its way through Congress that the cryptocurrencies are actually only good for terrorists. Terrorism, drug pushers, drug lords, bookies, people like that. It's kind of like the war on cash. Remember, they gave us that whole story too about how
that's right.
We got to get rid of the $100 bill because it's only used by bookies and junkies and people like that. Now, cryptocurrencies also a threat, just like cash is a threat. Cryptocurrencies they're pushing down that same road, and so they're outside the banking system now. And we'll see if at some point there isn't a crackdown in the future, whether they can crack down. I don't know, how the algorithms are written, whether they even can, but we'll see. But that is actually why the price has been rising, because these bankers that create all of the synthetic gold and use it as a substitute and get people to accept it as a substitute for the real thing, that allows them to control the price of gold and silver. And many other things, as a matter of fact. There are no Bitcoin futures at present. There's no, big stores of Bitcoin and ETF that they can raid whenever demand gets too high. And so therefore, Bitcoin and the other cryptos are actually just a regular old supply-demand deal. I know I first started buying Bitcoin last summer when I heard about the most recent halving, which means that the future supply was going to be cut in half, as they're mined. And I thought, well, wait a second, if demand is going to be increasing while supply is being cut in half, that'll probably work. And it's gone up, 4, 5, 6-fold since I started buying it back then. So anyway, why does Bitcoin move and gold didn't? And this is where we began this discussion a few minutes ago over the weekend, because Bitcoin is actually just a simple function. The price has to reset higher whenever there's demand for it. You got to move the price higher to find people who are willing to sell it. But that's not how the metals are priced. The metals are priced driven by demand for the derivative contract. The demand for the derivative contract is determined by a whole host of odd factors that wouldn't make sense to you or me or any other average person. And then finally, the supply of those derivative contracts is almost infinite as they're created and managed by those banks. And so the two are totally unrelated. And so for anyone to think that, they should be moving in tandem, on days that they do, it's almost just coincidence.
Well, Craig, I know our time is short today, so we were able to only keep it to these a couple of questions. Just one last parting shot for you. Goldman Sachs actually came out this week and said that that Bitcoin may rise another about 10%, 11% more, but then it's probably going to get knocked in half because it's already seen 5 waves of increase from back when it was 6 cents. Do you think, based on the technical trading that you watch for, if you say that Bitcoin and cryptocurrencies like it are behaving more like a true physical supply and demand market, do you think there's some credence to that concern that people may be seeing a topping for now and maybe should stay on the sidelines if they want to get in?
I would think at this point, it's going to sound kind of offhanded to say this, but I mean, at this point, it almost seems like it's still good to buy the dips. I've got a guy on my site that is a really good, just straight up traditional technical analyst. And he has maintained for the last several months, his target is 13,300. So you think, well, that's crazy. Well, it was 1,000 back in January. And now we're in August, it's at 4,000. So that's fourfold in 7 months. So does 13,000 crazy? Maybe, maybe not. Again, the neat thing about it is that there's only a limited amount of Bitcoin that are ever going to be mined. The ability to mine them the amount that can be mined gets cut in half every 18 months. And as demand increases, as people become aware of it, it's pretty hard not to see how it doesn't continue to climb. But again, that risk is always out there that these governments feeling that their power is threatened are going to crack down somehow, and either make it illegal, going to tax or move to somehow shut down retailers that may take Bitcoin instead of cash, as legal tender. I mean, who knows what these governments are going to do to attack it? That's coming. It's just a matter of how high that value per Bitcoin can go before they come after it.
It's almost as you said earlier, that as it goes higher and higher, it becomes a more visible and credible threat, just as gold and silver are currently being prevented to do. So, well, thank you, Craig. It's been delightful. It's been a short visit, but a good one, and we just look forward to the next time we can have you back here with us again on Reluctant Preppers.
Dunnigan, thank you. It's always a pleasure.